Hey everybody, this is Jose Blasco here. We are about to start. We have a few seconds to go, and it would be good to use this time as a sound check. Please go ahead and type a quick message on the chat box just to confirm you hear my voice. That would be appreciated. Thank you very much. I'll be watching for that so we can start on time. Thank you so much, Thui. Sandeep, you're asking about TOS, Thinkorswim. The apps are available for TradeStation and TradingView. So the typical way to approach it, if you use Thinkorswim, is to utilize TradingView for your charting and your analysis, and use TOS for the execution. That's how the majority of our app users deal with platforms other than TradeStation if you choose to execute with other brokers. And certainly TOS is a great one. Very good. So Leland, how are you? Good to see you. Ruben, a long time I didn't see you around. Good to see you, my friend. Nitesh, sound is good. Thank you for that. So let's begin the session. Here's the introduction slide. Today is April 2nd, 2020. My name is Jose Blasco. I will be your guide. Also, by the way, when I asked you about sound the other day, it seems that my sound was a bit saturated. My volume was a bit maybe too high. Let me know if you hear my voice clearly, okay, or my voice is distorted. If that's the case, I can just work a little bit on the settings to make sure that sound is good, okay? Thanks for that. And I was saying that welcome to the session. Today is 2nd of April 2020. And obviously, we are running the session today for longer term purposes, as you can easily read on the introduction slide. Certainly, those are unique times in the market. Last week, I had a technical issue and I was not able to conduct the option session. Really sorry about that. I am actually conducting the session from a different location, which is not my normal location. Hence, I got limitations with the bandwidth and the internet connection and its quality. So I won't be streaming using the webcam. I will just be using my voice over the charts, if that's okay, given the fact that I don't want to saturate the bandwidth that I have available, given these crazy times where I happen to be confined in a place like millions of people around the world. So everybody, please stay safe. Okay, really, really unique, but also crazy times. And normally, the word unique it's a good thing in this case. I'm not sure. I mean, for traders, certainly, there are opportunities in the market, but it's the craziness that is affecting people's health and people's lives. It's really, really painful to observe around. So everybody be well aware, be very, very safe. Okay, not an expert in health, but certainly I've seen crazy around me. So just a little note of advice. Okay, and everybody, let's please take this seriously. Clive, good to see you. Thank you for the voice. Is okay. And let's begin, guys. I only have one thing left, which is the disclaimer, and we begin. Okay. So disclaimers: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. That's the introduction, my friends. So the session is now official, and here are the charts. The markets opened 2 hours ago. Everything is moving. So let's begin with looking at the VIX. Okay, let's begin with looking at the VIX. Normally, the way we start the sessions, okay, it's I would put myself on the scanner and we start looking for those opportunities. Okay, that's what we normally do. But given the levels of volatility that we have reached, we reached levels up to 85. Okay, 85. Again, out of curiosity, if you are not aware of that, in '08, the levels of volatility reached the high of 89.53. Well, where right now we reach the high of 85.47. So again, almost the same highs as 2008. 2008 was an economic crisis, and people thought the whole system was going to go away, and the volatility reached 89, right? Well, nowadays the health is the reason for this crisis. But even though the VIX didn't reach 89 and stayed at 85, I have actually seen greater levels of volatility compared to 2008. So we are certainly in front of a very unique situation, and that's why I wanted to start with the VIX and also point at the fact that the VIX is just reacting to a green UFO with 68% probability to push the VIX back higher. And if that's the case, what will normally happen is that the market will begin falling and falling quite hard. Okay, so let's be very careful out there. We have conducted sessions in the past. They are recorded in the YouTube channel where I always talk about the fact that stocks are fragile. When we build a portfolio, we need to have longs and shorts at the same time, positive delta positions that offset and hedge negative delta positions. We have talked about rules on how to properly position the deltas and make sure you follow the rules religiously, because the temptation out there, and I just want to make this note as a cautionary note, if you wish, the temptation out there for many people is that the market has dropped so much that many people are looking at buying dips, which it's very, very deep, and it makes a lot of sense in normal cases. But this is an unprecedented situation, fundamentally speaking. And buying low doesn't mean it's not going to go lower. So make sure, as we always do, that you follow the rules. Okay, you don't fall into any sort of emotion or a gut feel, or this is what's going to happen. I know for sure. I feel it. I don't know why, but I do. And next thing you know, you get into a trade that was not planned, and then you get in trouble and you wonder why. So more than ever, okay, more than ever. I mean, I should not say more than ever, because it's always, trading is always mechanical, but certainly the temptation now is more than ever. So more than ever, make sure you follow your rules religiously. Okay, so let's be professional, everybody. So let's begin with looking at opportunities. Okay, and what do we have here? So we have debit opportunities, okay, on the top, which we use to go long and to go short. Okay, so we'll look at that in a minute. I would like to start with non-directional opportunities, pure non-directionals. I have it highlighted. So the opportunity you can see on the upper right with GILD Science, it's the only opportunity the scanner return. Okay, so we're going to take a look at the chart and see what happens. Of course, there is so much volatility that the conditions we have to do pure non-directional trades, which are, let's call it stable markets, well, are not easily found, given the fact that the craziness is humongous. And in that sense, we don't have many results in the list, only one. Okay, but we'll take a look at this one and see if we can plan a trade or not. And then finally, we also have credit opportunities for neutral long and neutral short trades, okay, which we will have a few more opportunities there as well to be explored. So anyway, so let's begin with GILD Science, and we will look at putting together a non-directional opportunity. Okay, questions here. Let me see. Royce, hi all. How are you, Royce? And Nitesh, Jose, just want to know if that scanner is available on TradingView. It is not. It is not. TradingView has a scanner, okay, and it's quite powerful, but it doesn't have many of the things that we do that are customized. And obviously, TradingView, let's face it, it's amazing. And actually, TradingView has some features that are not available in TradeStation, such as market replay. But as a rule of thumb, normally you would look at TradeStation as being superior when it comes to functionality. And TradeStation has a radar screen, scanner, and things like that, which is not available in other platforms. Okay, so that's why we provide access to the apps and the technology in two different platforms. So depending on your needs as a trader, you can use one, use the other one, or use both combined, depending on what you try to do. Okay, basically the scanner and everything else, basically it's a tool to save you time, so it's quite handy. Okay, so 55 minutes for GILD Science. Okay, let's see what we have. Okay, so well, first thing I will say is that looking good that we have 59% probability. That's a nice one. What if we look at pre and post market for a non-directional trade? We got 50. That's fine too. Okay, and looking at that, let me go back to the monthly time frame. Okay, so we had probably higher price points there around March 16. Okay, March 16. So I'm looking at March 16 because if you look at what's below price, okay, especially if I go back to the regular session, we do have multiple green UFOs below price. So in order to find multiple green UFOs, green colored UFOs, I'm fine with the data I have loaded on the screen. But in order to find multiple red UFOs, I'm going to have to download more data. And I do need that, because remember, for the non-directional trades, you need at least 2 red UFOs above and 2 green UFOs below. And we have the green ones, but we don't have the red ones. So we're going to have to load data all the way to March 2016. Now, the problem of doing that is that if I do it with AutoUFOs enabled, it may really challenges TradeStation, given the fact that TradeStation cannot use more than 4 gigabytes of RAM memory. Okay, so I disable AutoUFOs as you saw. I am now changing the initial date, the first date, to be March 1st, 2016. Now a download will take place. We can see that here with the PD on the upper left, pending data. So we'll wait for the download to take place. And then before I turn on AutoUFOs, because there is tons of data on my screen, so what I'll do is I will disconnect TradeStation from the network. Okay, I will disconnect TradeStation from the network. So that way, I don't have any issue with the AutoUFOs to be running real time and using a lot of computer power. The AutoUFOs will only have one opportunity to run, which is going to be one time to apply the algo. And that way I can find out my UFOs, okay, without having to saturate my computer. This is a little trick you'll see me do in a second to avoid problems, okay? Okay, so Nitesh, yes, because you are from India. I get you. Yeah, so you will need, Nitesh, a little bit more manual action there, because TradeStation does not provide, access to Indian markets in this case. Okay. Ruben, I have a lot of problems lately with TradeStation crashing all the time. Yeah, there have been problems. Okay, and Ruben and everybody, I would recommend you moving into update 45. If you move into update 45, you should be fine. Update 44 has been problematic with some of the modules of TradeStation that take care of connecting with the data network and grabbing data into TradeStation were not working fine, and they were creating a lot of crashes, and the scanner was working terribly with update 44. But with 45, it seems that they have fixed it. So update it, okay? Update it and you'll be fine. Yeah, Royce, when to do the scan? Well, I like to do the scan before the market opens, because then nothing is moving. So I can have all my symbols ready before the market opens, okay? And then the market opens, and then I spend time executing, okay? Could you rerun the scanner while the market is open? Certainly, but I prefer to do it this way. So that way I don't need to have, changing symbols on my scanner, if you wish. I have a stable list, and that's what I do. Clive, Jose, can I get probability using TradingView? No. The UFO performance stats is a feature of TradeStation. Again, same story. TradeStation is a superior piece of software and therefore has additional functionality. Okay, Ruben, but with TradeStation 10, doesn't it update when it connects to the internet? Yes and no. The answer is yes, Ruben, but not for everybody at the same time. So for people who got TradeStation accounts, let's say a very long time ago, it's kind of like you are first on the line. And for accounts that are newer, so they have kind of like a randomized process, but somehow they start with older accounts with the updates and then the newer accounts. So if you want to force an update to take place, it's either you call TradeStation support, or you just subscribe yourself to the test program with TradeStation. And if you are part of the test program, you will not install beta versions or anything like that. Okay, so you will not have any of those problems, but you will have a button in the help menu that allows you to force an update if you want. So I recommend you to do that. And if you don't know how to subscribe to the test program, then you would want to call TradeStation support, and they will guide you in how to do it. It's very quick. Okay. The only thing is that you may have a little bit of waiting time when you call, but then doing it is very, very fast. Okay. And then you have it forever. So I recommend you to do that. Okay. Cool. So we have the data downloaded. Okay. It was a lot of talk here while the data was downloading. And now I want to enable AutoUFOs, but remember what I said. If I do it now, I may saturate my computer. Okay, so what I'm going to do is I'm going to do a little trick. You have seen me do that before. I'm going to go with a period, okay, OFF for offline. And from there, I'm going to select working offline. If I do that, I disconnected TradeStation from the network. You can see here the red colored dots. That means I'm disconnected. So now if I run AutoUFOs, it's going to happen only one time. And at the speed of the light, look at that, I got my UFOs, okay? Even though I have so much data on the screen. Amazing, right? So So what am I gonna do? Well, I'm gonna do some plotting. Okay, everywhere or anywhere I should say where there is a UFO, I'm just gonna have a purple line. Okay, I'm just gonna have a purple line. I'm gonna do the same for the green since I'm doing it. So this is gonna be number one. This is gonna be number two. Okay, below we have number three. Okay, below we have number three. And then also remember the regular sessions were giving us that 56%. Pre and post market was giving us 50% earlier. Here is 53. So it's also fine for us to utilize. And if I do that, basically the one thing I do have is a few more UFOs on the bottom part where, you know, if I want to do this more precise, I can also add this one guy here, and I'll have another one right here as well. Okay, so all of those are the UFOs above and below. It's plenty of lines. Okay, I'm gonna simplify that in a minute. Okay, and to simplify that, the first thing is I'm gonna go back to a normal amount of bars, which is 500. Okay, so my trade station will not be saturated. Notice the UFOs are gone from the top, but I got my purple lines, which means there was a UFO there a minute ago if I loaded more data. Okay, and now I'm gonna go back to period ON for online. So now here the last option is working online. And now I just need to type my password. And the moment I do that, we'll be back in and we'll be able to continue the planning of the trade, okay? Okay, so reconnecting. You will see the connection here. You see I got green data now, and then the red color for the account now is blue for simulated, okay? So I am connected both with the data network and the execution network, okay? So what do we have now? Well, we have all of this in front of us. Now, by the way, I need a little bit of teamwork, a little bit of help from you guys because remember I told you before, my internet connection is not working totally fine because I am not in my normal location, given the confinement that we have here. So I would like to, I'm having trouble to load TradingView actually. So I would like you guys to help me finding out or confirming the earning date for GILD Science, okay? I'm gonna do it with Yahoo Finance, which is normally good enough, but I would like to get an additional confirmation from you guys to find out what is the earning date for GILD Science, because here it says it's April 30, okay? But I would like to confirm that you guys get to see the same, okay? While we do that, I'm just gonna turn on Option Station Pro, okay? And we're gonna start planning on the trade. And by the way, I myself also had some problems with TradeStation because update 44. So I did some installation and stuff like that. So I very quickly, I want to double check I got everything the way I need. Let me see. Yes, that's good. This is good. Yes, graph, option chain. This is good. This is good. This is good. Okay, perfect. Yeah, I just wanted to double check given the fact that I did a reinstallation. Okay, good. So I'm gonna load GILD. Okay, for our non-directional trade. Okay, and based on what I saw, which is earnings is on April 30, then I could use up to April 24. I could do that. Okay, but again, of course, the shorter the time to expiration, the better. Okay, and also you can see the level of premium 84, 87, 82. There is a lot of premium built in those options. Okay, so we may be able to find a good trade even if we're using dates which are quite close by. Okay, so TradingView 29 of April, 3 May 5, Clive May 7. Yeah, interesting. So TradingView is normally really accurate, so I'm gonna go with April 29. May 5 with earning whispers. Earning whispers has been proven to not to be so accurate, so I will pass on that one. Zax, I don't know. And 3, I'm not sure where did you get the May 5, but someone earlier mentioned Thinkorswim. Thinkorswim is another place where it's quite reliable to pick those dates. Okay, so I'm gonna go with April 29, and therefore, as I said, really, I don't want to surpass April 24. Okay, so but we'll start with 1 day to expiration to see what happens, and I'm gonna analyze and sell an Aaron Condor. I'm gonna analyze and sell an Aaron Condor. Okay, and when I do that, I'm gonna have to add one price slide. So it's gonna be minus 1 standard deviation. In the middle, I have the last. On the top, I'll have the plus 1 standard deviation. Okay, and basically what mathematics suggests, okay, is that if I was to use a trade using April 3 expiration, okay, even though I didn't adjust the trade, it doesn't matter. Just based on April 3 expiration, what probability suggests is that price should not surpass 78 point something and 71 point something. Okay, so let's find out where that is on the chart. That is right here. 78 point something is here. But again, remember, we have also the rule where we want to use at least 2 UFOs in our favor. So 2 UFOs will be 81 is first, second is 88. Okay, 88. So the question is, if I was to sell the 88s, okay, which are not on my list, okay, so let's load all strikes, okay, probably I'm not gonna get paid enough, okay, that would be the 90, okay, so I will get paid 13 cents, okay, 15, okay, and that doesn't meet our rules, okay, you probably remember we need a minimum of 35 cents, okay, so again, given the crazy amount of premium built in, I thought of checking what happens with 1 day to expiration. This is a $75 stock. If it was to be a $200 stock or something like that, probably the trade would work, but with $75 price point, so we don't have premium enough, even though implied volatility is showing 83s, 90s, 82s, okay? But what if we do April 9? Okay, what if we do April 9? So if we do April 9 and we sell the 90s, okay, we get paid 88. Now we do have proper level of premiums here. But before we get too excited, let's make sure we also change here April 9, because the moment I click on April 9, this will change the probability calculations, okay? And this is now telling me price may move until 85 and 66. So the question is 85 and 66, where is 85? Okay, 85 is here. So if I was to use the 88, okay, which again is going to be the 90 because there is no 88, okay? So if I was to use anything above 87, 77, it's fine because I got multiple UFOs in my favor, and on top of that, I am selling options beyond what probabilities suggest. So it's a good starting point, okay? So let's do that. Let's draw a line from the current price to that 87.77 mark. Okay, and that way I'm gonna now take that line. Okay, let's make it thicker so you guys see it better. And that line, I'm just gonna move it to the downside to project the movement to the downside. And this basically would put me in that second line, which is 62.28. So in other words, to do this trade properly, I would be selling the 90s and the 62s. Okay, 90s above with the calls, 62s below with the puts. Okay, so let's take a look. Probability suggests 66. So if I sell 62, certainly we are fine. So let's take a look at the option chain. The 90s, we said it before, pays me 89. I'm okay with that. That's good. The 62s, which we don't have. So it's going to be the 63s, okay? And the 63s, unfortunately, don't pay enough. They only pay me 16, okay? They only pay me 16. That is interesting. That is interesting. That's a 0.02 delta. And, okay, yeah, of course, that's a 15 delta. Yeah. It does make sense. So, yes, it does make sense. Okay. So even if I was to do, because, selling the 66 or something like that makes no sense given the fact I got no UFOs to defend myself. Okay. So, yeah. So I'm going to have to move to the next expiration date. Okay. And I believe that probably there it should be okay. And by the way, we should benefit from the greatest liquidity here because it's on the 15. We also have a little bit less premium built in, okay? But the fact that it shows 82 instead of 91 is also because those options are going to be more liquid. So you got a little bit less of a spread, and therefore many of the trading platforms which see narrower spreads and more liquid options would see that as less volatile. And therefore the number is less. But it doesn't mean it's going to be like that. Okay, so if I do the 60 something, now I get paid 55. That's fine. If I do the 90, Now I get paid 158. That's amazing. But again, the question, like before we get too excited, let's change the date from April 9 to April 17 and see what happens. So now we are dealing with the 88s. Okay, we are dealing with the 88s and the 63s. So the 88s, very good. So we have the 88 something there. Okay, we have the 88 something there, and we have below all the way, we're gonna have the 61 point something. Let's call it 62, even though I don't have 62. I believe I'm gonna have to use oh well, I do have 62.5, so I can use 62.5. Okay, so that's the plan. Okay, we're gonna go with that one, and let's see if the trade will work or not. So 90 is gonna be on the top, okay, with the calls, and after 90 I got 95, so I'm gonna have to use 90, 95. That's a pretty wide spread. Okay, that's not ideal, but hey, that's what we got. So 90, 95. Okay, and then on the bottom part, we're gonna use 62 and a half. Okay, 62 and a half, and then I will want to use 60 and get a spread of 2.5, but because on the call side I got 90.95, which is $5 difference, so I'm gonna have to move to 57.5 and 62 and a half. That way I'm gonna have $5 below and $5 above. Okay, so this is how it's gonna look like. Okay, this is how it's going to look like, and this is paying me $87 of credit. So as of now, everything is looking correct, meaning that this trade does look like it's going to be meeting our rules. Okay, but before I speak so freely, so quickly, so happily, I would like to bring the rules on the screen. So for the ones of you that are attending this session for the first time, or you've just been watching a few of the sessions only, so you get to properly understand what I'm thinking, which is number one, we want options to pay 35 cents minimum. So we are selling the 90, right? Selling the 90 and the 62.5, red color in the middle. Okay, so the two in the middle, put and call, 62 and a half and 90, that's what we sell. So I'm looking at options, and 62 and a half pays me 55. 55 is more than 35. I'm happy. 90, okay, 90 pays me 158. 158 is more than 35. I'm happy. Okay, so all of this is good for first rule. And the second rule, and that's the delicate one, is that now we need to look at the credit collected, and we need that credit to be at least 15% of the difference between strikes. So the difference between strikes is $5, 90 to 95, and 62 and a half to 57 and a half. That is $5. So how much is 15% of 5? Well, 15% of 5 is 75 cents. So taking this trade, as long as the Condor pays at least 75 cents, would make sense. Funnily enough, not sure it's a good joke. Okay. So because we are provided with the credit that our rules suggest, then the trade is valid because if you recall, we are being paid 87 cents for this trade. Okay, so the trade, my friends, is valid and I'm gonna execute it. But before I do so, I would like to write it down on the screen so all of you would be able now to follow much better. Okay, so first, what are we doing? We are doing an iron condor. We do an iron condor made of buying the 97 call above and selling the 90 call right under. Both are above the collection of UFOs that we had on the screen, where I only left the purple line, but we had multiple UFOs above. All of this is going to be done, I think it was April 17, 2020 expiration date. Okay, knowing that earnings are on 429. Okay, so it's perfect because we're gonna be out of risk before the risk takes place based on the earnings. And then finally, below, we're gonna be selling. We said the 62.5 put. Okay, and below that put, we're gonna be buying the protection, which is 57.5 put. where again, both above and below, the difference between 62.5 to 57.5 and 90 to 95, it's $5. And therefore, the risk of the trade is 5. Let me take a look, quick one here to the dates. Yes, 17th of April, I said that right. So April 17, that's what we've got, okay? So that's the iron condor that we are putting in place, okay? And it is right for us to enter this trade right now. So let me give you one more instruction when it comes to the risk of the trade and so on, so you know how many contracts to use, because the quantity is key, isn't it? In my case, as you can see, I'm using one of each, okay? So you guys may go ahead and do two of each, three of each. It depends. And of course, the more you use, the more you make, but also the more risk you have. So how much is the risk? Well, the risk is the difference between strikes, 5, okay, minus the premium collected. So if you were to collect 87 cents, so 5 minus 87, this is 4.13. In the world of options in the US market, everything is times 100. So that would be $413 of risk for this particular iron condor with 2 weeks to expiration. Let's say you tell me I'm okay with that, then go ahead, take the trade like I'm going to do myself right now. Let's say you tell me, no, I'm not good with that, this is too much for me, then don't take the trade, because given the nature of this trade and the fact that we got $5 price increments between the option we sell and the option we buy, okay, the spread is $5, so the risk is 413, and we cannot do anything to make that better, okay? So that's what it is. Let's say you tell me I'm okay with 800, I'm okay with 1200, okay, so do the trade with 2 contracts, 3 contracts, because this will multiply these times 2, times 3, etc. Okay, so for one contract, 413 would be the risk, okay, and I'm just going to do the trade myself here by clicking on trade, okay, and I'm just going to go with a market order to get filled. For sure, don't use a market order yourself, go for 87, 88, okay, and then if you get filled, just type it on the chat, so the other students, the other traders in the group taking the trade, at least they get your reference, okay? So we do a little bit of teamwork and we help each other understand where the market is, because even though the natural price is 77 and the midpoint is 86, market makers often will want to fill your order, and you would normally get price improvement, okay? So I'm just gonna go with normal pricing, place order, yes or no, yes, 1, 2, 3, here we go. So the order has been sent, and as you can see here in the bottom part, I have been partially filled for now, and right now I've just been fully filled. So if I look at the manage tab, I just got on GILD, I got 4 options here, okay, which if I was to expand, okay, actually I like to do this, if I was to expand like this, and I was to grab each side and merge it with each other, so basically you will see how TrustStation is going to tell me, hey, that's an iron condor, my friend, okay? So I can go ahead now and get rid of this, okay? And now I have here my iron condor, okay? So of course the spread is producing a little bit of a negative P&L now, but also let me add it, customize column. I'm going to use my theta, and now this trade it's making $7.63 per day as of now. So a couple of days, and let's say the market doesn't move and you stay a couple of days in the trade, now you're break even, and from there profit starts kicking in, okay? Cool. By the way, what would normally happen on this trade, okay, and we will conduct more advanced option sessions too, and we did discuss that in the playlist, in the sharpening playlist, okay? So you can go ahead and take a look at the options videos that we have. But what would happen if I look at the implied volatility of that stock, and for that I need to move to daily time frame. Okay, so if I look at implied volatility, volatility is to the roof, okay, to the roof. So what is very likely going to happen is that volatility will drop, and let's say it drops from 87 to maybe 60, maybe 50, okay? So if volatility drops, what's going to happen is that those options are going to become so cheap. So instead of waiting 15 days and to make the whole profit, if you got a significant drop on volatility for that stock, which I would not expect it to happen anywhere, right now immediately, because remember the VIX was in a green UFO. Okay, but anyway, it could happen. Okay, because on-field orders could be canceled. So if implied volatility was to drop somewhere to the midpoint or something like that, probably you would have most of the profit already collected. The most you can make in this trade is, as you know, $87, isn't it? So maybe in just a few days you find yourself making like more than half of that, and therefore at that time to remove the risk it would be worth it to just close the trade ahead of time without waiting those 15 days. Okay, but I will let that for you to watch, because obviously this is something to be observed in a daily basis. Okay, cool. Okay, so I took my time to put this trade in place. Okay, since the opportunity was interesting, and I wanted to make sure everybody was with me on this. Okay, so let me try to adjust everything on the screen again in case anyone wants to take a screenshot. This is the writings that I have done, and I will give you just a few seconds. Look at the chat box and go for the next trade. Let me see. Hey Bojan, how are you, my friend? I'm just reading you now. That was 15 minutes ago that you typed, and no one else has typed in 15 minutes. You guys are amazing, listening carefully to what I was putting together here for you. So guys, let's go ahead and type something for me, guys, if that's okay. How did it go as I was planning this trade? Let me know if it's good. Just type good. And if I went too fast or there is an additional question, please let me know before I move into the next one, because this is a proper opportunity in front of us, and there were multiple things to be discussed, and every day we have more students that come into the sessions live, where some of you have not been with us before, and therefore I want to make sure everybody's following. Okay, so a little bit of feedback is certainly super appreciated and hopefully helpful to you as well. Too much engaging with your tour plan. Love it. I will not complain about that, Nitesh. Busy putting in the trade. Very nice. I love to see that as well. Good. All good, Jose. Very clear. Clive. Good. Very good. Nice. Perfect. Thanks for those feedbacks, my friends. This, again, it really makes a big difference here on my end. Okay. Good. Okay. So let's go for the next one. Okay. So we are looking at, we have been looking at non-directional. So it's time to move now into directional. So I want to load the S&P first. I'll have a sip of water if that's okay, and then we begin. Okay, so S&P. Here's the S&P. Huge amount of red overhead. Okay, so be careful. Okay, especially again, I'm back to the little note, the little bit of sharing, a little bit of experience in the markets. Okay, it's very common for investors, especially that you see the market after falling so much and now is bouncing back up, and next thing you know, you want to get into investments, etc. Well, my friends, look at all the red we got in here. Okay, can we go through this? Of course. Is it likely going to happen in one candle? Probably not. Probably we'll see pushes to the downside, which are quite aggressive. Okay, so be aware, okay, and be respectful, and also be realistic. Okay, everybody. So what do we have from a climate point of view? Okay, from a climate point of view, the S&P is now giving us a red dot when the climate, okay, when the climate becomes red in the case of the S&P, okay, and this is candle number one. Statistics suggest the S&P is gonna fall for 5 days. Okay, or a normal thing would be 5 days. It could be 3, it could be 2, it could be 10, but a normal thing would be 5. Okay, so we are right there, right where the average is. Okay, exactly where the average is. Okay, and you know what happens with the average. Okay, price comes to the average and from there falls. Okay, sometimes it goes through, but then it comes and reacts. Okay, and then it went down and now is at the average. Okay, so the normal thing would be we have a movement to the downside based on the climate. Anything could happen, but again, we need to decide about our trades based on tools that are objectives and at odds for us. Okay, and certainly what we do makes sense, and therefore just be careful out there for the ones of you with portfolios which are loaded with trades to the long side. Okay, so no hope guys, no hope. We are not in a market. We are never in a market where we hope, but certainly less than ever, given the current levels of volatility, where from one day to the next one, overnight, you can see a market down by 10%, and things like that. Okay. And the futures halted and things like that. So, everybody, please be safe. I said it a million times and I'll keep saying it. I say it in normal sessions, but certainly in a day like today, in current times, I do need to say that. Okay, so I'm going to start with looking at opportunities to short. Okay, the scanner found 26 opportunities. Okay, so I'll start with those. Okay, so I'm going to sort the stocks based on their prices. Okay, so I'm going to be smart with the selection of the stocks based on prices. Okay, and then just to have a little bit of offset, if we have time, we will also look at some opportunities to go long. Remember, as I look at opportunities, my assumption is that whatever trade I plan, you need it. Okay, but one more time, that stocks are a fragile asset, that when you build a portfolio out of stocks, you need to be respectful of the S&P. You guys may already have 5, 10 trades to the short side, so then you may not need to add the trades I plan today, so then just observe. Okay, but my assumption is I'm going to plan trades beginning to the end, assuming you need it. Okay, make sure you manage your portfolio properly, and if you don't know what I'm talking about, it means that you need to be watching the recorded sessions on the playlist. Okay, when we do sharpening, where I talk about portfolio management and hedging and things like that, make sure you take a look because it's important. So Amazon is a $2,000 stock, certainly an amazing company, but at the same time, for most traders in learning stages, it's probably a little bit of a too high of a price point. So I'm gonna start with Costco, okay, and see what is Costco providing us with. Okay, so Costco is providing us with a climate which is here you can see. Okay, it's 2 out of 3. Okay, so when Costco falls, normally it's 3 days. In other words, this is a stock that normally moves up way longer than it moves down. And certainly, with such a crazy market, it went down. But if you look at the amount at which it went down, it's kind of like going sideways, okay? And kind of statistics are telling you this, where it's only 3 candles and we already consumed 2. So, you could certainly go ahead and plan a trade on Costco, not a problem at all. But given the fact I got more stock symbols, I want to be a bit more purposeful, trying to look for stocks where, based on their probabilities, it would suggest that they are likely to travel for a longer period of time to the downside and then get into trades that are likely to produce larger profits. Okay, traveling more days in a direction also means larger profits, isn't it? So what do we have? Well, Amgen here, I got a problem. Okay, and the problem I have is that even though with Amgen we do have a clear climate and now it's 1 out of 5, this is way better than before. The problem is that Amgen is now clearly above the average. Okay, so certainly it is in a territory where we don't want to touch it at this moment in time. We want to deal with Amgen when it's below the average, but now it's above. Okay, so we're not going to touch it, and therefore we go for Alibaba. So what's happening with Alibaba? Okay, so Alibaba, we have a similar situation. Okay, similar situation, and we may have a trade. Okay, we'll see in a minute. Okay, I'll confirm that in a minute, but certainly that's way better. 1 out of 6. Okay, so just started. Okay, 189.83 and 189.44. Remember, stocks are fragile, so I don't need to be too precise. I am slightly above the average, but it's okay for me to think about I am now hitting the average. Okay, so if I'm hitting the average and I have the proper climate, so the only thing I need to find on the right, it's I need red UFOs. So let's see if we have red UFOs. Okay, it has to be current price. Okay, those UFOs at 198 don't work. Okay, so 56% with a pre-post market. What about regular session? Regular session provides 46%, and that is not acceptable. Notice how the institutional interest for Alibaba happens to be during pre and post market data. Okay, pre and post market hours. Therefore, we will ignore this trade. Okay, so what about Lulu? So Lulu is providing a scenario which could be valid. Let's take a look. So Lulu is providing a climate, okay, a climate which is 1 candle out of 5, so that's good as well. And 183 is the current price, where the average is 185. Okay, so we are looking on the right. We need to find a red UFO which is a little higher than the current price. Current price being 83.53. We are looking for something around the 185 mark. That's what we're looking for. So do we have anything around the 185 mark? So we have a UFO here, but I'm not going to even check because it's 42%. So I'm going to pass. What about pre-post market? Pre-post market is 45. So really disappointing with Lulu. So I'll go for Octa. So let's take a look at Octa. Okay. Octa, from a climate point of view, looking good. Okay. So we got 1 out of 5. Okay. Red color, thick, confirm. Average 119 something, current price 117. Okay. So if this market rallies $2, okay, it's going to hit the average. Okay. And that's what we want. Okay. That's what we want. We want to act at that moment in time, isn't it? So let's see if we can find on the right, we can find a red UFO around 119. And of course, it has to have at least 50%. So we got 50%, but we got nothing around 119. If we use pre and post market, what about regular session? Unfortunately, regular session provides 41. That is not good enough. So we move to FedEx. No emotions, no emotions, my friends. And remember something we say all the time. The job of a trader is to say no more often than yes. Okay, so we need to discard, 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 accept. Discard, 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 accept. Okay, so for now I'm discarding. So 1 out of 8, well, that's looking very, very nice for a trade. 115 is the current price. 117 is where I want the UFO to be. So we are looking for red UFOs on the right around 117. So let's find out. Okay, well, with pre-market, okay, very, very disappointing institutional interest. What about pre and post market for FedEx? Still disappointing. Wow. Interesting. Anyway, we keep going. IBB is an ETF. I'll pass on this one. UTX, United Technologies. Let's go for it. So with UTX, okay, we got a good setup, okay. 2, confirm out of 5. So we're good. Average is 93 something. Current price is 90 something. So we're looking for 93 point something for the UFOs, okay? And it's still pending data, so we're just gonna wait. Here we go. So 38%. If we look at pre-post market, what about regular session? 43%. Very, very disappointing stats for those stocks, unfortunately. So XLV is an ETF. So we move into Roku. So Roku, what are you providing us with? Okay, well, stats for AutoClimate are nice. So we got 2, confirm 2 out of 7. That's very nice. Average is 85.95. Okay, around 86. Okay, current price is 83. So we are looking for red UFOs on the right around 86. Okay, so what's the bottom part of this? 87.23. Okay, 87.23 is the bottom part. So that is a bit too high because this is 86, isn't it? So that's a bit too high. What about if I look for a pre and post market? That 50 becomes 46, and unfortunately, it does not qualify. So let's move into Nike. Being picky, my friends, being picky. Okay, Nike will not work because even though we do have a proper climate, we are above the average. Okay, so just like before. So we move into CVX. CVX, same story, looking green, but looking red, but it's above the EMA, so we're gonna pass. Okay, so TSN, Tyson Foods. Okay, that one is looking really, really nice. It's actually the one looking the best as of now when it comes to AutoClimate. We'll see the UFOs. So 2 out of 9. Okay, so when that stock falls, it's a huge fall. So let's see if we can catch this one. You can see came to the EMA, crashed, came to the EMA, crashed, came to the EMA, crashed. So if it comes to the EMA, okay, we may have the same again. Again, we are not hoping this is going to happen. We are trying to catch that using the UFOs and so on. Okay, so we are looking for UFOs at 57. We have something around 57, but unfortunately not good enough if we were to use pre and post market. What about regular session? Is not. Okay, that one is a shame, but that's what it is. Expedia. Let's move to Expedia. Okay, so Expedia is looking more or less like Costco. Okay, 4 out of 6. Okay, so I have Costco in my mind, Expedia in my mind. Let me try to find something a bit better. So AMD. Yeah, Nitesh, it's okay. It's okay. I mean, for sure, if you are trading the Indian markets, you could apply the same that I'm doing right now. But obviously, you could not do that iron condor the way I did with the Indian markets. You could only use, the front month expiration. You could not use all the way to April. Well, actually, yes, you could. You could use April 17th, uh, but not with that stock. Anyway, so what do we have here with AMD? Okay, so AMD pre-post market 49.48, not good enough. SE, okay, SE 1 out of 5, but we are above the average. Okay, so we'll pass. DD, so let's see what's happening with DD. We are above the average. I will pass. LUV, Southwest Airlines, so we got 4 out of 6. Okay, so LUV together with Expedia, together with Costco, those are stocks I will check at the end if I find nothing. But again, we are already into the climate, 4 out of 6. So I'm looking for climates that are beginning. Potentially, I could catch longer lasting moves. Okay. So XOP is an ETF. So I'll move into BSX. Boston Scientific Corporation. We are above the EMA. So we'll pass on that one. United Airlines. United Airlines is 4 out of 7. So UAL, it's another stock I will check afterwards, just like Costco, Expedia, and Southwest Airlines. EWZ, that's an ETF. MRVL, let's see. We are above the average, so we'll pass on that one. IQ. You know what? I'm going to pass because $18 is kind of like too cheap. Okay. So I'm going to go back to Costco, guys. Okay. It's been a lot of discarding. I told you a minute ago, the job of a trader is to say no more often than yes. But really, it's been a lot of no's, isn't it? So I'm going to be focusing on the UFOs to be efficient. So 48, 50. So 50 is good, but we don't have UFOs until 322. So Costco will not be a valid one. Expedia was my next one. So 42, that's not good enough, Expedia. Pre and post market 41, that's not good enough. By the way, there is something I didn't say that you may be realizing, and maybe it's getting you thinking. Why is it? Why would you say that UFO performance stats are so disappointing, right? Why would you say that's the case? Okay. Well, we know is because there is no institutional interest. Okay, when orders are placed and they are not filled, they are canceled. So there is limited institutional interest. So no wonder why those stocks are all in a down climate. Is that making sense? You get it? So if you were to look at stocks to be bought, we may find cases, as we have done before as well, where we have 40 something percent instead of 50 or above, and we understand that this is a stock to not to be traded. But notice how in this list almost every one of those stocks got that problem. And why is that? Well, I guess I answered right. So there is little institutional interest, and that's why they are in a down position. So there is a lot of no's to be given to those trades. Okay, so Southwest Airlines, what do we have? 42% with pre-post market. Okay, what about regular session? 35. Okay, wow. And the last one here, United Airlines, would be very sad if in the end it's no for everything. But it could be. Okay, so 36% with regular session and pre-post market is giving us 43. Okay, you know what? Okay, problem. Okay, since I have reinstalled TradeStation, my default amount of bars here is 500, and you're gonna laugh at this one, but this is probably impacting the probabilities since the markets have been just falling straight in the recent times. 500 candles probably provide a result for stats which is not the one I'm looking for. Okay, so I'm gonna set as a default for the 55-minute time frame 1587 bars. Click OK. It's gonna reload data, and I'm just gonna look at what's gonna happen now, because probabilities could be quite different now. Okay, still 44, still 42. If I do regular session, it's now 50 for United Airlines. Okay, good. Okay, so my bad, my friends, since I had the problem with TradeStation and I didn't think of that, so I'm gonna restart using AMGN. Okay, and let's see, that one is above the average, so we'll pass. What about Alibaba? I'm just gonna look at those stocks at the speed of the light, and when I see an opportunity, I will then let you know. Okay, so let's wait for pending data for Alibaba. Funny one, isn't it? Or not so funny. Ruben, when you see in AutoClimate that the stock is near the average for this AutoClimate, so it's likely to turn to the other direction soon, continues, but the time to target is much longer, then it will turn the opposite direction before reaching your target, regardless on how long left this climate, right? Yes, yes. But also remember, you have seen many times, okay? This happens many times. Right now, for example, we have it in front of us. Okay, so if I look at Alibaba, probability suggests when the market falls is 5 candles. But how many candles you got here? Like it's double. Sometimes it's even more. Okay, so those trades pay amazing. Okay, those trades pay very, very well. So it's worth it to expose yourself to the trade, even though the climate may change. If you do the calculation for time to target and the climate may change, it's still worth it to expose yourself to the trade, because if the climate overextends, okay, like sometimes it does happen, then you just got a fantastic trade. And if not, guess what? You're going to cancel the trade because of a change of climate, so you'll get out for some profit anyway. So it's fine. Okay. So 49% with pre-post market, with regular session, pre-post market would be 1, 2, 3 for Lulu. Come on, Lulu. Would be 53%. So that's valid. The EMA is 185 something. So what is the bottom part of that UFO? The bottom part is 187. So yeah, unfortunately, it's not in the right location. Okay, so what about Octa? So what I said before about the performance stats being lower than the stocks that are moving to the upside makes a lot of sense. But I was kind of feeling that, wow, it's kind of like an unlucky day today where almost every single stock is terrible when it comes to these probabilities, okay? But the problem was, my issue was the bars on the chart, okay? So anyway, we have 119 for the average here, and we have a UFO here where the bottom part is 121, so it would not be in the proper location, and it's 46 as well, so that's not good. What about FedEx? So FedEx is providing 45, but we need to wait for the PD to go away. That value may vary. So it's 46, and if we do pre and post market, then it becomes 1, 2, 3, and we got 3 minutes to go. So I'm not sure we'll be able to put a trade in place. 48%. So what about UTX? UTX looking 52%. We're looking at 93. There's nothing at 93 here. So what about if we do regular session? 52. What's the bottom part of this one? 93.87. Hey, you know what? We got a trade here. Okay. So UTX is providing what we need. We got 52%, which is good enough. We got 2 out of 5. So we are at the right time during the climate to be in the trade. This UFO is lining up correctly with the EMA 93.87, as you can see. Okay, 93.87. It's good enough compared to 93.63. Remember, as this moves from 90.22 higher, it's going to bring the average a little higher, which is going to be basically lining up with the UFO. And if it doesn't line up, it's okay. It's a stock. Stocks are fragile. As long as it's kind of close, it's good enough, and we don't even need to be that precise. Okay. and therefore it's time for me to set a target for that stock. So I'm going to turn on auto UFOs, okay, and I'm going to turn off auto climate, and I'm going to have to load more data here. Okay, so let me see in a monthly basis how much more data I need to load. So I may need to load data all the way to September 12. Okay, so September 12. Okay, so it's going to be daily, and I'm going to load data all the way to September 2012. Is not be enough. So I was here, right? September 12. Okay, so maybe I'm gonna go for August 11. So August 11, daily August 2011. Do we have any green UFO? No. Okay, so that's quite weird actually. Let me load a bit more data. I'm just gonna go for 2010. Okay, now we got something. Okay, so the target here would be for UTX. The target would be 65.73. Okay, and this, by the way, Ruben, this is the case you were mentioning before. This is a very, very, very far away target. It's very nice to see, but at the same time, it's very unlikely that we're gonna get there in one move, in one climate. Okay, so what normally happens is that you will apply trade management techniques during the life of the trade, and you will probably end up exiting this trade somewhere in between. It's a good thing that there is nothing in between, because it increases the probability that you will catch a large move. If there were plenty of UFOs to stop the price from falling, then the probability of this to happen is less. So it's a good thing. But at the same time, the further away your target is, the less likely you will get there. Okay. So let me put this straight together. Speed of the light. Okay. Given the fact that basically it's time to conclude the session, but at least I want to give you a directional one. So UTX. Okay. So UTX, we have earnings happening on April 21st. Okay, well, that's around the corner. Okay, that's really, really, really around the corner. Okay, so we're gonna have to use. I mean, I'm not gonna even bother. I'm not gonna bother to do the TTT calculation, because the TTT calculation, given how far the target was 65.73, is gonna be way after April something, and I cannot be holding a trade into earnings, isn't it? So therefore, I'm just gonna use the earnings date. Okay, we said earnings, it's April 21st. Okay, so using April 24, that would be my choice. Okay, that's 22 days to go. And remember, you need to be out before earnings. Okay, so if earnings are going to happen on the 21st, make sure you get out before the 21st, even though we are using 24 as the expiration date. Okay. Okay, so looking at questions and so on. Okay, so let's go ahead and right click and analyze and buy a vertical spread. So we'll be able to analyze everything here. Basically, I got two important values for me to understand, which is my entry value and my target value. So again, my target value, 65.73. It's kind of a waste of time for me to type it, because I would be really, really shocked if we get there and in such a very short amount of time, which is only 22 days to expiration. But at the same time, it could happen. Okay, it could happen. So I do want to have this calculation and this everything ready. And then my entry, if I go back to looking at that UFO, remember we said it's a 93.87. Okay, 93.87. That is the entry price. So 93.87 87 is the entry price. Okay, so what do I want to do? Well, the way I would normally plan the trade is to go ahead and first look at how much I get paid if I sell an option beyond the target point. Okay, but you know what? I'm not going to do it. Okay, and here is why I'm not going to do it. Look at the crazy spreads. Okay, 2 to 50 cents or 1 to 5 cents. So there is no liquidity at all there because let's face it, price is not likely to go. Only 20 something contracts are not paying interest. So I'm just gonna, instead of doing a spread where I would, let me go back here, instead of doing a spread where I would buy an option, sell an option, okay, I'm just gonna go ahead and cancel this trade and just go ahead and buy a put, and that's it. Okay, so I'm just gonna go ahead and buy a single option on the put side. That's buy a put. Okay, now the question is which put? Well, I want the put to be between my entry and my target. So that means below 94. Okay, for example, 92. But also I have requirements. Okay, I want my put at entry to provide a delta of around negative 30, and in this case it's not negative 42, meaning that it's too much. So I'm gonna have to drop it to 91. That's 39. What about 89? That's 34. What about 88? That's 32. What about 87? That's 29.95. So that's the one I'm gonna go for. Okay, I'm gonna do this. I'm gonna buy the that particular put. Okay, and do it in this way. Okay, of course I'm gonna be losing a lot of money on time decay, $12 a day, okay, which is quite bad given the short time to expiration. At the same time, as earnings approach, I would expect volatility to pick up value and therefore make money at a rate of $8 per percent of volatility increase. So my Vega may offset my theta given the expiration date I picked. Okay. Of course, the key is going to be to have a move and to have the move to happen quick. Okay. So what is the expected value at entry? This put is going to cost me around 300 something. So maybe it's fair for you to think of a risk of $350 if you buy that put. Okay. So if you are okay with that risk, take the trade. If you want to take double the contracts, etc. I'm going to do the trade myself with one contract using the 87 put with April 24 expiration. Okay. And the way I would execute the trade is, of course, with a condition, which we call that an activation rule in TradeStation, which the condition will be that the price of UTX is greater than or equal to 93.87. So if UTX gets to this point, this will activate a buy order to buy the put from me. Okay, and I'm gonna make this a day order. So if it happens today, I'm happy. If it's not today, I want it to be expired, and then I can reconsider tomorrow. Okay, so day order, I got market. You can do better with limit. Okay, but again, since I'm using a simulated account, I'll do market. Activation rule, UTX greater than or equal to 93.87. So when I place my order, which I'm doing now because the session should be concluded, isn't it? So you have the confirmation window here where you can see we are buying the 87 put that expire on April 24, 2020. And I already said all the parameters, so I'm just gonna click yes. And the moment I click yes, in the manage tab, I got a receive order here for UTX, which is a day order waiting to get filled with a condition. Okay. In the meantime, we are picking up some time decay here. So the minus 15 is now minus 3. So that's good. But anyway, this is just the beginning of this trade. That was our Iron Condor with GILD. Okay. Anyway, everybody, I need to conclude the session. We exceeded by 10 minutes the duration of the session. So I did want to give you this trade as well. So you have it. Anyway, I hope the session went well for you, my friends. Keep up the good work. Send questions if you have any. Be diligent, be professional in the current market conditions. Do not improvise. Be safe. The volatility at the current time, it's not a joke, which is also a recipe for opportunity, but also a recipe for huge amount of human emotions. Manage yourself, manage your emotions. Be safe, my friends. If you have questions, shoot an email. Bye-bye. See you soon. See you next week. Bye-bye, everybody.